China got admitted into the World Trade Organization in 2001, and since then, successive Chinese leaders have tried to garner the image of a stable and mature market. It took years for Beijing to garner a trustworthy image, and since then, it has seen large amounts of investments that have accelerated its growth. It is often said that destruction is always easier than creating something. Xi Jinping has made it his task to prove the same. His paranoia knows no bounds, and he is mobilizing all resources to take on Chinese tech firms one after another. Investors are now scared, as they know whomsoever Xi Jinping lays his eyes on is finished, be it Jack Ma and Alibaba, Tencent, edutech sector among others. Xi Jinping is single-handedly killing brand China, and it is going to have some disastrous effects. Hi and welcome to TFI Global, the foreign affairs and geopolitical analysis arm of the TFI Media Group. I am your host Sanbir Ranhotra, and in this video I will tell you how Xi Jinping's actions are making China lose its weight at light speed. Let's begin. The authoritarian megalomaniac has lost his wits, and to satisfy his vulnerability, he is cracking down hard on the overall technology sector. Xi Jinping is a market illiterate person with a paranoid personality, and he is unaware the impact his actions have on the Chinese economy in general. The impact of his actions has evaporated the trust between the market and the investor. He has managed to instill such a level of fear and distrust among the investors and markets that wealth evaporates immediately whenever there is news that the leadership is unhappy with a certain sector. Emerging markets such as China attract investors who see opportunities in the rising middle classes and increased consumer discretionary spending. However, this comes with its own risks. If the country's policymakers start cracking down on companies as per their will and wish, investors and markets alike get out and wealth evaporates. This is exactly what is happening in China. The country is losing wealth faster than any other major country in the world. Tencent Holdings Limited has gone from being a market favorite to the world's greatest stock loser this month as a result of China's unprecedented crackdown on its technology industry. As of Wednesday, the Chinese internet behemoth has fallen 23% in July, putting it on track to have its worst month ever after losing almost $170 billion in market value. According to Bloomberg data, this is the quickest evaporation of shareholder capital in the globe over this time period. Chinese companies, notably Meituan and Alibaba Group Holding Limited, account for 9 of the top 10 losers in shareholder value this month. To put things in perspective, China's tech industry has been hit by a slew of regulatory body blows in recent months. According to Goldman Sachs analysts, shares of overseas listed Chinese IT businesses have already lost $1 trillion in value between February and mid-July before this week's drop. While other countries can rely on the fact that as things stabilize, the investments will start pouring in the case of China, the fear has reached such levels that investments may become history. After dealing a massive $800 billion blow to China's tech giants in the last few months, a megalomaniac Jinping has now set his eyes on another blossoming sector. China issued new restrictions on Saturday that prohibit enterprises that teach school curriculum from making profits, raising capital, or going public. It's the latest setback for Larry Chen, the founder, chairman, and CEO of Gaotu Techedu, who has lost more than $15 billion in wealth since late January as the value of Gaotu's stock has plummeted. The mushrooming sector, which had great potential and thus attracted exciting investments, has now fallen prey to Xi Jinping's anti-market and business-subverting policies. Chen is now worth $336 million, according to the Bloomberg Billionaires Index, after the shares in his online tutoring firm fell by nearly two-thirds in New York trading on Friday on rumors of the regulatory overhaul. This is just the latest example of how Xi Jinping is destroying the trust of the world in the stability and transparency of Chinese markets. Earlier this month, China's cyberspace regulator deepened turmoil in the country's tech sector on Monday. It announced national security-related reviews of 2 more companies that were recently listed in the US a day after unveiling curbs on ride-hailer Didi Global in the wake of its $4.3 billion New York IPO. The investors were already vigilant, but had kept their faith in the logical understanding that China will not cut its own wings by voluntary regulatory actions and destroying its own market viability. However, it is exactly what China has been doing. The fears rose with the sudden crackdown on Jack Ma and his Alibaba empire last year. According to Forbes, a vigorous onslaught by the CCP on Jack Ma's empire has reduced Alibaba's fortunes by half of what they were in October last year. Jack Ma was a symbol of an entrepreneurial China, which has had enough of communist dictatorship. Jack Ma inculcated an aspirational environment among the youth of China. He personified the way in which previous leadership of China built brand China since its entry into the WTO in 2001. It took a lot of years to persuade that while China is an authoritarian country, it does not interfere in the market economy and tries to keep the natural flow of the market as it is. However, the actions of Xi Jinping are not only drying up the investments in the short term, but it is also killing brand China. With the demise of brand China, the trust of markets and investors across the world is dying too, and this is what is resulting in the gigantic loss of wealth in China.